I would like to say that, the Indian economy remains resilient. You look at the whole world, where the other economies are standing, the kind of stress they have gone through. The entire world has withstood multiple shocks, and I call it triple shocks of COVID-19 pandemic, then the war in Ukraine, and now the financial market turmoil. The financial market turmoil is mainly emanating from the synchronized monetary policy tightening across the world by central banks, especially the advanced country central banks, led by the US Fed. And naturally, the spillovers are felt by the emerging market economies, like including India. So, in this kind of successive, turmoil that the world has gone through, that has left the entire European Union is today facing a recession situation. They're on the brink of a recession, but there are possibilities that they will avoid that. United States is holding stable, but there are other countries also where the growth has slowed down. Now, so far as India is concerned, economy, overall macroeconomic fundamentals, the financial sector stability, all these aspects, they remain resilient. The banking sector, that is the financial sector, is stable because all the parameters with regard to banking or the non-banking lenders or the other major financial sector players, you look at the data, I don't want to, load too much of data on you. They are stable. Overall, the financial sector in India is stable. The growth numbers are looking good in the current context. Our estimate is that India will this year grow by about 7%. The IMF has projected that India will grow by about 6.8% in the current year. And that puts India among the fastest growing major economies in the world. We have a major challenge with regard to inflation, but comparatively, if you see, our target, the upper ceiling is about 6%. The last inflation number which was released for September, the inflation was 7.4%. We expect the October number which will be released on Monday, we expect that to be lower than 7%. So therefore, inflation is a matter of concern with which we are now dealing effectively. For the last 6 months or 7 months, we have taken a number of steps. We have increased the interest rates, and government also has undertaken several supply-side measures. So overall, just to sum up, the macroeconomic fundamentals of India remain strong and resilient. Growth prospects are looking good. And I think, as we assume the G20 presidency, thank you. As we assume,
thank you.
As we assume the G20 presidency in 2023, I think India is taking over the presidency of G23 at a time, in a year which is perhaps the most challenging year in modern times, and we are assuming presidency of G20 with stronger macroeconomic fundamentals compared to many other countries.
Inflation, you spoke about inflation, and in keeping with your mandate, one part of your mandate as central bank is inflation management. You sent a letter to the government explaining the whole process of management of inflation and why it is still above the band. Can you tell us what you said in that letter, or is that information confidential?
No, what we have written in the letter, I think anybody can make an intelligent guess. Basically, the law requires that when for 3 consecutive quarters the inflation remains above 6%, it will be treated as a failure of monetary policy, and the Reserve Bank is required to write a letter to the government highlighting 3 things. Number 1, what are the reasons for which it has happened? What are the principal reasons behind that? Number 2, what steps the Reserve Bank proposes to undertake to bring it down below 6% and closer to 4%, which is the target rate. And number 3, what is the time frame within which we expect inflation to come back to the target level. So we have broadly explained the reasons as to why it happened, and I have spoken about it on several occasions. In fact, I think about a week ago, I also spoke in one conference in Mumbai, where I have explained why the inflation went up in India. Now, in February this year, when we met in the Monetary Policy Committee, our inflation projection, and which was not different from what the market, the professional forecasters were estimating, we projected in February this year that our average inflation in 22-23 financial year will be about 4.5%. We did stress tests assuming crude oil even at $100. And we found that even at $100 per barrel of crude oil, the inflation would be maximum 5%. That was the estimate we had made in February. Then on 24th February, the war started, and naturally it completely changed the picture. And thereafter, the crude oil hit $130 per barrel before coming down to 120. It remained around 120, 110 for considerable period of time. Now, of course, it has come below 100, but it ranges between 93, 95, 96. So in February, it looked that the inflation is well under control and India is well on course to reach the target of 4%. But the geopolitical crisis, the sudden spike in commodity prices, the sudden spike in edible oil prices, the sudden spike in prices of cereals, wheat, for example. We have surplus wheat, but price of wheat in India also went up because we are a part of the globalized world, and the international prices of wheat went up because, from the Black Sea region, a lot of wheat exports goes into the rest of the world. So we were impacted by major external factors, and the entire inflation picture underwent a particular change. So, these are the three things, as I mentioned. We have explained why it happened. And the other two aspects, I don't think I'll be able to tell you now. The first question you can answer yourself, and I have said it earlier, it's easier to answer. But the second two questions, I will leave it for the time being.